Hey everyone, me Kevin here. Oh boy, oh boy, oh boy. Donald Trump is creating a whole lot of hopium and opportunities to not only trade and make some money, this is why people are talking about buying calls, including myself, but it's also watering down this huge tariff threat that everybody's been critically worried about. We gotta talk about exactly what Donald Trump just said, what some of the details of this are and the implications of this. Is Donald Trump responding to what's going on with Nike or FedEx? You know, Johnson & Johnson just promised $55 billion in spending. Spoiler alert, it's total bullcrap. I'm going to show you. You might think, what, Kevin, how is Johnson & Johnson promising they're going to spend $55 billion? Bullcrap. Because your boy Kevin sits here and he seethes over investor relations documents, drinking coffee and more coffee, more coffee, more coffee. I need more coffee. And then I can tell you if things are bullcrap or not. But the first thing that I want to say is, I want to kind of, just mention that it is good that companies are investing more money in America. And yes, the idea is that tariffs are supposed to make America great again and all that stuff. I know, we've heard it all before. There's just a level of fugazi in some of the stuff that we're getting. But let's first talk about what Donald Trump is talking about, and then we can actually get into some of the details and all the other goodies. Okay, first, markets are rallying at the moment, and NASDAQ might actually go green here because of what Donald Trump just said about flexibility and exceptions coming to tariffs. This is very different from what we heard regarding Liberation Day. In fact, I want you to pay attention to something very closely here. Just about 25 minutes ago, I sent a message to my course members, and I sent the following. Take a look at this. This is transparently what I posted. I wrote, risky day lottery on QQQ. Quick logic, Trump talking about flexibility and exemptions for tariffs. I put $5,700 in, 38 cents on a day call, right? I have a stop limit set, and I said I'm looking for 479 on the Qs for a rejection point. With a trailing stop, and I kind of edit in some more of my comments. Look at this. I even post a screenshot of where my lines are. I'm like, look, we might be going to 479 here. And what's remarkable about that is if you actually look at what happened, oh my gosh. We got rejected at 479. It's crazy. So rode this wave, made about 125% on that option. And what's remarkable is this just happened, and you could be part of it over at the Meet Kevin membership for less than $1.70 a day. You might not know this, but mostly because I think there's a good chance we might end up going into a recession. We came out with an option for you to just basically pay a small fee and sort of like lease your course access, course member live streams or trade alerts or whatever. And you could get that over at meetkevin.com. So you get access to all of the courses, you get every trade alert, every private live stream, all the alpha reports, the trade alerts, every course member meetups, the wealth plan library, real estate analysis, the blue wrench, whatever. You could see what the pricing is over at meetkevin.com. That's what we do. I can't guarantee, obviously, you're gonna make money with every trade, but my goal is just to give you as much perspective as I can. So do check that out over at meetkevin.com. I think it's a steal of a deal, and we're probably gonna raise the pricing on the sort of per day cost a lot, just because it's a pretty good deal. But a lot of people are looking for something accessible right now. So we think that's a cool opportunity. But anyway, I'll take my 125% on that trade. That was awesome. And hopefully many more to come with that. So what I'd like to do, though, is talk about what Donald Trump just said. So Donald Trump proposed flexibility if corporations promise investments in the United States, and that he's really targeting reciprocal tariffs. This is very much in contrast to this talk about, we're going to have Liberation Day on April 2nd. These are going to be the largest tariffs we've ever seen, blah, 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 blah. So Johnson & Johnson just, and I need you to know this, okay, because we got to separate the fact from the noise here. Johnson & Johnson just announced this $25 billion investment over the next 4 years. And what they do is they mention, hey, we're going to increase our spending compared to some of the last years. We're going to look at new manufacturing facilities. But when you actually look at what they say right here, This article doesn't put it as succinctly as I've seen in others, but basically the company's saying they're going to spend $55 billion over the next 4 years on research and development, new infrastructure, and facilities in the United States. Now, what's fascinating about that is Donald Trump cheers this, right? Donald Trump says, oh my gosh, this is so great. Johnson & Johnson is going to invest $55 billion into America. This is fantastic over the next 4 years. And so, like, what I like to do is, because I don't like to take things at face value, is I look and I say, okay, you know what I'm going to do is I'm going to go look at the 10K, and I want to go see what this company has been spending on R&D and capital expenditures. And how does that compare to what they're pitching here? Because I have this sort of like sus mindset that people are sort of just bending the knee to Donald Trump and saying they're going to make all these huge investments because they want to be exempt from tariffs, when the reality is they've already been making those investments and that there's really nothing changing. And so what I did is I went into Johnson & Johnson's annual report. This is just one example, right? And what did I find? Oh, interesting. The R&D expense at Johnson & Johnson in 2024 was $17 billion. That's just research and development. Okay, well, 17 times 4 years is $68 billion. You're cheering that you're going to spend $55 billion in R&D and U.S. investments over the next 4 years. You already do. In just research and development alone, you spend $17 billion in a year. You already spend more than that. Like, this headline should be Johnson & Johnson reduces annualized investment into the United States over the next 4 years due to uncertainty. And so I think savvy investors are looking at this and they're realizing a lot of these huge announcements of, oh, Donald Trump is getting $1 billion or $1 trillion of new investments into the United States. No, these are just companies restating investments they're already making. Additions to plant, property, and equipment, $4 billion last year. You know, they've done $12 billion over the last 3 years. Okay, so what are they going to do? So they create some new facilities. They always create new facilities. They're always investing. So maybe they increase the $4 billion to $5 billion or whatever, right? That's great. I'm not saying that's bad, but they're already, when you combine R&D with their plant, property, and equipment expenses, they're already spending way more than $55 billion. It's sort of like what you've seen with Apple. Apple's like, oh, you know, we're gonna spend so much more money on on spending in the United States. You already do. So maybe not as extreme as Johnson & Johnson here, but I saw the Johnson & Johnson one this morning and I'm like, my goodness, this is fugazi. Companies are basically assuming that people don't look at their financial statements, and then they're cleverly wording their investments into the United States to make it seem like everybody's pulling new money out of some magician's hat. And they're throwing it at Donald Trump going, here, look, Tony, look, $55 billion in expense. Isn't this great? Oh, that's good. You know what? Fewer tariffs for you. Good boy, Johnson & Johnson. It's moronic. Come on, man. So, like, I want to actually see these companies actually start spending this extra money. And I don't think we're necessarily going to see it anytime soon. I think a lot of what we're getting is complete fugazi. Now, we'll see. I do not, and I want to be crystal clear about this because I have this debate with folks regularly. I do not want to see a recession. I don't think anybody wants to see a recession. Seeing a recession is kind of, the best analogy I could think of, that I was thinking about this morning was this idea that, like, oh, you want a new car? Go total your car so your car insurance buys you a new car. Okay, but you might die in the process, right? Obviously not that extreme in a recession scenario, but like, job loss and the pain that comes with everybody cutting and spending less is really bad. Nobody wants a recession. It's bad. That said, Donald Trump proposing this sort of flexibility is fantastic because it somewhat suggests that, hey, he is truly just negotiating. This is the tough balance, though, that markets are striking because, look, at the end of last year, election time for Trump, everybody's like, hey, he's just using that as a negotiation ploy. Well, the last 3 months disagree with that. The last 3 months are like, oh my gosh, he's serious. Because he's literally saying, I will not back down from tariffs. And then this morning it's like, well, we'll pick some favorites and there'll be some exemption. Okay, so nobody knows. And that uncertainty obviously leads to a sell down in markets. The question is, will that sell down in markets where the sort of household wealth is more exposed to stocks than it ever has been before, comparing back to 2021, comparing back to 2001, people have never been this exposed to the stock market. And so is it possible that a decline in the stock market could lead to more layoffs and a recession? Of course, it's entirely possible. Does that happen? Hopefully not. But this flexibility from Trump in terms of the news is good. We want to see him slowly start walking back these tariffs. In fact, I think what we really want to do is go back to free trade. We've talked about this in other videos before. But the announcement this morning obviously doesn't go quite to the level of free trade, but it makes it very clear that the targets that he's looking for are reciprocal tariffs on countries within, let's say, the European Union. There will be flexibility on tariffs, he says. He says a lot of people are asking for tariff exemptions. Of course, that's exactly what Tim Cook did at Apple in 2018. They're going to play the same playbook. The same playbook that they played in 2018 is what they're going to take out right now, is make Trump feel like you're doing what Trump wants, and then he'll exclude you from tariffs, and your company wins. Old news. But you know, this discussion about Donald Trump also speaking with Xi Jinping is very important. See, you know, yesterday we have this idea that Elon Musk and Donald Trump are going to review war plans with China, this 21-page slideshow where the Department of Defense is like, here's how we go to war with China. Here are the strategic targets we strike. Here's what we do with our Navy, our Air Force. Here's what we do with nukes. This is the nuke page, whatever. And then, of course, the right is like, oh, that's all fake news. And the left is like, oh, my gosh, why is Elon at this meeting? And who cares? None of this really matters right now. What matters is that China is playing a very smart game right now. China is playing a smart game because China realizes the best way that they can get out of the depression that they've basically gotten themselves into with their real estate price collapse is by spending their way out with stimulative measures, which is what they're doing, enabling people to finance at lower down payments, which is what they're doing, which is what the Federal Reserve in the United States will do as well at some point in the future. And you're in a position where China is telling the world, hey, you want to trade with us with no tariffs? Come to China, free trade. So I actually think there's a chance you could get somebody like Xi Jinping suggesting to Donald Trump, why don't we go towards free trade? Instead of more tariffs, why don't we go to fewer tariffs? And let's on both sides reduce tariffs, which as a business person, I think Donald Trump is actually trying to accomplish. That would be a win for Trump. Now, it wouldn't necessarily mean we'd have enough money for our Doge dividend or no taxes on those making under $150,000 a year, but it would mean lower tariffs on net, which would be contributive to an economy that can globally expand. You don't want the world economy to slow down. So I am optimistic that there is a likely path where all of a sudden we go back to free trade and it actually is more free than it ever was before. That is a bullish scenario if it happens before a recession. If you're already in a recession, it's too late. The negative doom loop continues. But if you're not in a recession yet, and you can avoid a recession because, as Powell says, the soft data hasn't turned to hard data yet, and people's sentiment changes, and we don't end up self-fulfilling a recession, well, that's fantastic. That would be absolutely wonderful. Best case scenario, it'd be good. You know, no matter what happens, house hack's in a great place. You know, we're going to buy the day. I mean, can you believe, by the way, my real estate startup, in such an uncertain economy, managed to raise over 7 figures already in our non-accredited round in just the last 36 hours or something like that since we probably mentioned it. It's kind of crazy. But it's also a sign, I think, or a symptom of people being uncertain and wanting to hedge their real estate or sort of their stock exposure, because a lot of people have a lot of stock exposure today. And I think people are looking going, yeah, you know what? I'll take a company that'll buy the dip on real estate and deal with all the tenants and toilets for me because I need some diversification. Well, obviously, it's not personalized advice for you. You got to figure that stuff out yourself. But anyway, this is it would be really good if this happened. So I want you to know, buy the dip, Kevin, could come back rapidly if we go to free trade And people are always going to go like, oh, Kevin, you're just flip-flopping it. No. Like, really, it would be good if we go back to free trade, and not only do we go back to free trade, but we go to a free trade that fosters economic growth, supportive governments, and we avoid a recession. Look at where we sit right now on the Qs. It's a complete disaster. You know, we have fallen perfectly to my 476 to 479 line. This is the euphoria has basically been cut down, right? And I think Donald Trump is reacting to some of this pain. You know, FedEx and Nike was a complete disaster. Don't even get me started on Nike. We went deep, by the way, on Nike in the course member live stream this morning. And I had a lot of things to say about Nike. We go through the fundamentals. If you want to be part of those course member live streams, remember, get the Meet Kevin membership. It's less than like $1.70 a day or whatever. Just go to meetkevin.com. You get it all, including the Alpha Report course lives or whatever. But a lot of people watch. I think we've got like 3,000 or 4,000 people that on a daily basis, they watch the live streams on 2X because they like the perspective. And, you know, I very clearly signpost like if this, then that. And I try to make things simple, but also not like one-sided. You know, I don't care about Democrat or Republican. I care about like what are we going to do with our money? You know, like it's apolitical. So that's my take. Okay, here's a question from Ryan. Any thoughts on Elon powering the world with his solar power? Has me excited to invest in Tesla more. My average drops every time I buy. Well, good for you. Solar is the future. I'm convinced by that. Oh, the Qs are about to go green, by the way. Solar is definitely the future because there are endless opportunities for us to place solar panels. Chinese solar panels are actually exceptionally cheap. And when you actually layer this idea about Chinese solar panels into this discussion of free trade and Trump being a little bit more chill here on tariffs, you have to think about it this way. Any company, and we talked about this yesterday as I was walking out of the hospital. By the way, Max is out of the hospital, which we're really grateful for. But you have to think about it this way. If a company today is like, Donnie, we're going to invest $100 billion into the largest solar factory manufacturing plant America has ever seen. Donald Trump is going to be like, oh, I always knew I saw a businessman in you, you know, and then you get waved on, tariffs or whatever, and, come to my dinners, come play golf with me, whatever. And then guess what happens? You spend $100 billion building a solar panel manufacturing company in America. 4 years later, you go to free trade either under Donald Trump or under the next president, and all of a sudden your solar panels are way unaffordable. The Chinese solar panels blanket the world in solar power, and you go bankrupt on your $100 billion investment. It would be a very stupid decision right now to manufacture in America because of that likely flip-flop. Keep in mind, it would be smart to do what TSMC did and take all the Biden bucks you can get your hands on and let Biden build your factory for you because it's basically government subsidized. But, Donnie T and sort of his fiscal spending intentions don't seem to indicate that those sort of handouts are likely to continue. But anyway, this is very good news for the market right now. And I think it's, I kind of I can't stop laughing about it on the inside a little bit, how the 479 line was perfect. I love the lines, you know this, but I sent this trade alert this morning, and in the alert, I said, I'm looking at 479. We could reject there and trigger stops. Now, my stop got triggered. I had $57 on sort of a YOLO call. It was up 125%, and I sent the alert to everybody, 20 minutes before or whatever. But it's really interesting because we're settling right under that 479 line. Honestly, I should have a line like right there, 479. But I think this is just I think this is just front running 479.62. Although that 479 line looks good. Now, if we break this, just free little perspective, if we can break out of 479, watch 484. 484 becomes really interesting if we can break out of this into the close. Now, on the flip side, the question is, is it solely, buy call time because Donnie says there's going to be flexibility on tariffs? No, not necessarily, because we don't have the tariffs yet. And then the question is, when the tariffs hit, what are the reciprocal tariffs going to be? And then it's not that we think they're going to last forever. It's what is the damage that's going to come after that, right? The damage after that is what we're most concerned about. Is the hard data going to roll over? You know, I'll post a video later, but I'll give you a little spoiler, just a little spoiler right now, because I have a lot more that I want to put into it. But Goolsby this morning basically said that rate, and I talked about this in the Alpha report too, that rate cuts will probably be more aggressive in the future because we're sitting here not doing rate cuts right now. In other words, the longer we wait for rate cuts, the more aggressive we have to be with the rate cuts once we start conducting the rate cuts, which is actually fantastic. I mean, not only do I think it's going to provide us more trading opportunities in the Meet Kevin membership, get everything for under $1.70 a day, and you can, hey, try it. If you don't like it after 30 days, cancel. No harm, no foul. Try it for 30 days. What does that cost you for 30 days? Nothing. Give it a shot. I think you'll love it if you haven't considered it yet. And if you have questions, you can always email us at staff@meetkevin.com. But, you know, Goolsby's suggesting rates are going to plummet. You know who that's really beneficial for? Well, house hack. Can you see we have a new theme on the websites, by the way? I don't know about you, but I personally love the theme. I think it's like awesome. So, but anyway, yeah, I mean, like rates coming down is going to be freaking epic for house hack. You know, because we don't have any mortgage debt, which is awesome. But anyway, the Q's just turned positive. Gained the lead. I really got to turn the soundboard back on. Maybe I'll do that later today or after I do this live stream. But this is great. I mean, again, if we break this line here, I think 484 could be in play. So an interesting strategy. Also, you're almost at 247 on Tesla. This is another upside play we've been watching. As you get the breakout, you go to 247. 247.69 is your line. You know, we're sort of pre-selling off, you know, or consolidating, I should say, right before it. But yeah, watch this. This is very interesting. So, okay, let's see what, I want to see what the doomers have to say about this, because I've given you a lot of my insight and sort of my thoughts on this, including, I think that Johnson & Johnson piece. You know, if you're just now joining, you really want to pay attention to that Johnson & Johnson piece. But let's go to see what the suits are saying quickly. So what do the suits have? Treasury should steepen. Treasury curve is likely to steepen after the Fed policy meeting this week alleviated recession fears. Yeah, that's their opinion. And the market created the impression that the central bank is less concerned about inflation than previously thought. Whether the curve should steepen or flatten for here is up to debate, blah, blah, blah. They think it's going to steepen. I think when the curve steepens, you know, you're actually knocking closer on the door of the R word, but we don't want to think about that today. Today's a happy day. Kevin bought call. Can you believe Kevin bought calls? I already closed my calls because I took my, you know, 125% gain. But yeah, you know, like when the facts change, you gotta move, you know. Okay, retail traders keep buying U.S. stocks despite losses. In a stock market battered by by trade turmoil, growing fears of an economic slowdown, retail investors are doubling down, undeterred as their losses mount. Yeah, there's a risk in that. I personally, this is not personal advice for you. I'm just trying to put myself in the shoes of others. I would diversify away from stocks. That does not mean sell everything. It doesn't mean run for the hills. It means if you're 100% stocks in crypto right now, which I know a lot of you are 100% stocks in crypto, I'd be looking and saying, look, the first thing I want is no margin. Because if we have a big dip, I don't want to get called out, right? And second, I want some diversification. If you're 100% stocks crypto, you don't have any exposure to real estate, it doesn't have to be house hack. You know, I'm not trying to like shove house hack down your throat. Go buy your own house. Go buy the dip on your own fixer-upper. Go invest in some other real estate. I don't care if you don't want to invest in my thing. It doesn't matter. I'm trying to give you perspective that I think is broadly reasonable, that it makes sense to reduce your exposure to stocks and crypto. I would argue, by the way, and this is, people are probably going to clip this out of context. I can't get contents. Oh my gosh, context. But that's okay. Clip me, baby. If we have a repeat of 2001, where we have a lost generation of 13 years of no returns on stocks, crypto will go down as mankind's largest wealth destroyer to ever exist, because it will perform horribly in the lost investing generation. Now, could that create the buying dip of a century? TBD. It could create the greatest buying opportunity ever. TBD. We'll see if that actually plays out. But I actually think if we have a recession, crypto will be the absolute worst place to have your money. That's my opinion. I could be wrong. I'd rather be in gold, which sounds crazy. It sounds so boomerish. I'm sorry, but it's just not. It's an asset that relies on risk. It's an asset that doesn't rely on fundamental cash flows. It relies on people's desire to diversify into, basically the dollar's purchasing power evaporating when it comes to Bitcoin, which is fine. It's going to continue to evaporate. But you want to be around when the money printer turns on again. That's when crypto booms again. There's a child on CNBC. I haven't seen this.
56.55, which is down 0.1%, and the Nasdaq Composite is down or up 1.
What is this? Take your child to work day? Look at the face. He's got he's doing the Elon.
The week that was here overall for sectors, because that broadening out trade, Jack.
That's funny. Well, good for him. That's kind of cool. He's bringing his. I love it. They should do more. Take your kid to work day. I mean, I bring my kid on stream sometimes. I'll bring them all on stream. So I'm a big fan. But anyway, those are some of my thoughts here. Let's see. Somebody says, "LOL, wow, I really just can't with this market. It's like a scenario out of a textbook." Are you a millennial? Because I don't know of anybody older than a millennial that would start a sentence like that. But I'm a millennial, so I'm not saying that's a bad thing. But it's like a scenario of a textbook. The thing that's a scenario out of a textbook is how similar we are to prior recessions. We cut 100 basis points and rates go up 100 basis points in the market. That's like 2007. The overvaluation, what we're seeing in the real estate, in the stock market, not the real estate market. The stock market is like, straight out of 2001. Equity allocations and some of the euphoria valuations are absolutely nuts. Again, don't even get me started about Nike. But then again, I was a little dirty to Nike this morning. Upstart tariffs canceled? No, just talk about flexibility and trading opportunities. And then we talked about Johnson & Johnson lying to Donald Trump, and Donald Trump, getting off on, I shouldn't say that, getting all excited about about companies saying, we're going to bow down to you, Mr. Trump. There's a lot here. Just watch it back on 2X. So let's see, what else do I have here in terms of commentary? Let's see. Palantir has been stuck between $80 to $90, I feel like, forever. And I don't know that with certainty. I just feel that way. But it seems like it's been a tough one to actually trade because it's been so consolidated. Yeah, this range, minus this drop right here where you briefly went to 77, you've really between this line right here, where my mouse is, and that 90. Like that spot, the last, what is this, the day chart? Yeah, the last 3 weeks. Last 3 weeks, that's where you've been stuck. It's kind of interesting. So, when shopping the last days, sure, we can all go into a recession, so simply DCA on the dips. Timing that is way too difficult. Interestingly, Vanguard disagrees with DCA. Vanguard has research that suggests the best way to invest is to lump sum invest. But I would argue against that idea right now. I don't think you want to lump sum invest. I'd agree. DCA is probably better. So, but yeah, what's interesting is, dollar cost average was a thesis back in the dot-com bubble as well. And you spent 13 years dollar cost averaging. The problem is people retire. People want to buy a house. People have to buy a car. People have to pay off debt. And, when you lose a generation of investing enthusiasm, all of a sudden, all the DCAers, start looking a little loony. But, whatever. So I can't wait to be back to buy the dip, though. Like, you know me. I feel like I'm like Mr. Buy the Dip. So I can't wait. How's IWM doing, by the way? The Russell 2000? Yeah, that's not a surprise. So, here's the Russell 2000 And, I mean, obviously we hit a peak here in December after the Trump election, had a summer peak as well. We've lost both of those. You've had quite a bit of retracement here, which does make you wonder, like, is it time to buy small caps? All of 2022, small caps were sitting in the floor over here. Now, I don't necessarily like the setup that you have here because, you know, of the potential for, I mean, really the potential for recession. But then again, I'm a little bit of a bear. A little bit of a bear. I can't wait to turn around. So he says DCA makes you stoic. DCA doesn't make you stoic, dude. You've been DCAing for the last Nike swoosh 2 or 3 years or 4 years. It's been straight up, man. 10% correction is nothing. I want to see you DCA from 2001, lose 50% of your money, come back to flat, lose 55% of your money, and still be DCAing if you had a job to be able to support it. The odds are you wouldn't. So I mean, I hate to say it, but you know, anyone DCAing the last 4 years has had a really good ride, and I agree with it. But I don't know that it's definitely going to last if we have a recession. I really hope we don't have a recession, though. I really want to avoid that. It's not ideal for people. So anyway, yeah. Okay, what else? Okay, so what is your probability in the next 6 months that Trump decides now is the time for free trade? Ooh, that's a really good question. I'd probably argue there's a 40% chance. Yeah, I actually think there's a good shot of that. You know, 40% is quite a bit. 40% chance, in my opinion, you mark that down on a calendar somewhere if you want. 40% chance that Trump goes for free trade this year. I think his tax plan will be more, you know, is almost certain this year. But that I expect is already priced into the market. Free trade would not be priced into the market. I would say the odds of free trade over the next 4.5 years is like 99%. The odds of free trade in the next 6 months, there's definitely a shot. Yeah, definitely a shot. So Eric V says, yep, my father lost $640,000 from DCAing 1989 through 2006. Wow, that's crazy. I'm sorry to hear that. But that's what I mean is it's like that generation. So millennials don't know this and Gen Z don't know this. So generations probably between 50 to 70, they know exactly what I'm talking about because they've had the feeling, they've seen the blood, they've seen the pain of true economic despair. We've kind of been in loony bins time if you think about it. Like since 2008, QE infinity, it's been a little loony bins. Now, I'm not saying we're not ever going to go back to loony bins. I think we're going to go back to the lowest rates we've ever seen. And by 2032, I think rates will be lower than they've ever been before, and we'll have negative rates. But hold on, CNBC says the stock market correction is over, so we must be okay.
Okay, so when I asked Powell the question on Wednesday about the, basically about those two risks and how the Fed would come down, he said, look, we look at each indicator and we say, which is further from our mandate and which is the one that's in the outlook looks like it's going to end up being worse. I'm kind of squinting and trying to understand where Fed folks come down on those risks. And it sounds like to me, and I think this is what the market is taking from it, that the Fed is cool with the idea that medium and longer term inflation expectations are well anchored. So it doesn't see the, I don't know what you call it, the clear and present danger right now on the inflation side of the mandate. And that this sort of...
All right, whatever. This is old news. Okay, I don't want to waste your time with that. Instead, I'd rather you look at these beautiful lines. Have you seen more beautiful lines than this? Nobody knows beautiful lines better than me, Kevin. So we talked about the 479 rejection, which we got for quite a while, and that we traded with 125% profit. Thank you. Today, it's a good trade. Remember, you can get those. Join the Meet Kevin membership, meetkevin.com. But anyway, look at that. Basically, I mean, I wouldn't even call that a failed breakout. I would just call that a rejection at this point at 479.62. But I still maintain that if we can break this moment right here, 482 is in the cards. I think you just got a lot of bullish buying right here. and people are taking profits in this what's essentially a consolidation. I mean, if you go to the 5 minutes, it's going to look like a consolidation. So, you know, this is a mess. It's hard to make a directional bet in that kind of mess. So anyway, okay, good. What else do we have? So that's the news on Trump. We talked Johnson & Johnson. We talked about, recession talk. We talked about DCA versus lump sum investing. We talked about diversification. Volatility index has actually gone down. We were positive 6% today on massive option expiration day. Huge option expirations today, mind you. Another one of the witchings. And March 21st. Yeah. This is, overall, I'd say good news, and hopefully the good news continues. Hopefully we get more enthusiastic Trump. I like enthusiastic Trump because I do not want to see a recession. Okay, let me see if there are any other leftover questions here. Yeah, I'm going to do a video on Goolsby. I thought that was a hilarious interview, so stay tuned. We'll do that. Let's see. Yeah. Okay, so last couple things to mention. MeetKevin.com, membership, course member live streams, every trade alert, every alpha report. You join now, it's less than $1.70 a day. Go to MeetKevin.com to join it. If you don't like it after 30 days, cancel it. But you get access to everything right away, so give it a shot. Try it for a full 30 days. If you like it as part of your routine, if you like just even checking in once in a while and asking a question, check it out, MeetKevin.com. If you want to diversify a little bit from the craziness of the stock market, check out househack.com. In just the last 36 hours, we raised over 7 figures, which is really impressive for this economy. And to me, it's a sign of a lot of people wanting to diversify a little bit of risk from markets, get away from some of the insanity that we're seeing in valuations, and get into something that I actually think you're getting at a really great price. And it's a benefit to the course members and to the people who follow the channel. I'm not like so well known on Wall Street that, we get this crazy multiple at this point. We're like a tiny little fish in the sea of real estate, and we want to grow into the big fish. But you're getting in at small fish valuations, and we're doing it in a safe way with no bank debt, a lot of cash, a lot of asset value, and we're offering 100% upside on the stock and a 5% yield with downside protection. It's kind of awesome. You can check it out. You just go to househack.com, hit invest if you're accredited or not accredited. The non-accredited round is open. We buy, we fix, build and manage. You get 100% of the upside. You get 5% of the year, and there's downside protection. You could read about it, all over here. These are our actual properties, mind you. Like this is the stuff that's backing your investment. Like the crap, garbage to gold, baby. Or actual buildings. Like we own this beautiful building. That's what you're investing in. Like that's the backing that you get at HouseHack. So it's not like some SPAC that's selling you a hope and a dream. We actually have PCAOB audited real estate, like tangible properties you could drive by. And that have value in great areas that are growing and who have been growing during the disaster of COVID bubbles blowing up in different areas, which we've been avoiding, obviously. So something to think about. Read the circulars and PPMs. Video can't be a solicitation. You got to read the documents. You can see all of our properties, which is kind of cool as well, all of them. So go check it out over at househack.com. And that's all I got for you. So thanks so much for being here. We are, look at that rejection again, rejecting off the Meet Kevin line. Also, I don't only send alerts when I'm trading. I'll also send alerts when I see patterns and I'm like, hey, watch for this or watch for this. So I think you get some kind of cool perspective. Again, try it. Try the Meet Kevin membership. Less than $1.70 a day. I think it's a steal. All right, folks. Thanks for being here. Now I got to figure out how to, I really need a better button for like end live stream, but I usually just want to hang out. So I like it. Anyway,